Hey everybody, Jeff Dorman here, Chief Investment Officer at Arca. Back for another edition of That's Our Two Satoshis Live, where we talk about what's going on in the digital asset markets. We've been doing this for, I don't know, 5 years now, every week in our written blog that you can find on our website, ar.ca/blog. And more recently, doing it here live, talking about what's going on in the market. So don't let the blue skies behind me trick you into thinking it's warmer here in LA than it is. It's cold out. It's been miserable. It's been raining. And actually, it's been that way for the equity and debt markets pretty much all February as well. But here we are a couple hours from the close, and the digital asset market has drastically outperformed most other asset classes. So I think a lot of people were surprised by that. Not so much us in the sense that we've been calling for a decoupling really for 6 or 7 months, and I think February was finally the one that has everyone else coming on board there. But we saw a big January across the board in just about everything, right? From fixed income to equities, across the board, commodities, and then the exact opposite here in February with equities about to finish the month, or actually just did finish the month down. Bonds actually, the Bloomberg Global Aggregate Total Return Index had one of the best Januaries on record, and followed that up with one of the worst Februarys on record, with the 10-year Treasury moving about 55 basis points higher on the month. So with that backdrop, pretty impressive here. What we're seeing in the digital asset market to close the month here. I'd say, depending on which index you're looking at, you're anywhere from up 1 to 2% to even up 4 to 5% on the month. So before we get started and talk any further, as always, let me give you a disclaimer. This commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. Okay, so what happened specifically last week that gave us this outperformance? I think it was mostly you know there's so much going on right now in the digital asset market that what we're seeing in the regulatory market and in the global kind of macro market it's not that it doesn't matter, it's that it is just being dwarfed by some of the positive news, right? We know the regulatory environment here in the US is cracking down. We know that there's been certain shifts in the macro environment really since the beginning of February, after the FOMC meeting and after the Powell presser, and after some of the more inflationary prints that we've seen, as well as the better than expected jobs data. But that shouldn't really be the focus when you have everything from liquid staking, to layer twos, to now Bitcoin having an actual narrative here with ordinals. There's just a lot going on in the digital asset market. And last week specifically, it was all eyes on Coinbase. And I think it's always interesting to watch the equity analysts cover something like Coinbase, because not only is it clear that a lot of them don't really understand how this business operates, but you have all different types of equity analysts covering Coinbase, right? Sometimes it's being covered by the technology team on the Wall Street desks. Sometimes it's being covered by the finance team. Sometimes it's being covered by a brand new desk dedicated to digital assets. But even though you have inconsistency with the way that the street is covering Coinbase, you have a very consistent negative sentiment. If you go back and look at, if you have access to Bloomberg, I'd certainly recommend going to Coin Equity ANR and looking at the analyst recommendations. But almost everybody had a buy recommendation in 2021, with a $300 plus price target. And then after May, if you look at May 2022, Coinbase stock fell about 75% on the heels of Terra Luna and the UST collapse, and ultimately the bankruptcies of Three Arrows and others. After the stock fell 75%, that's when every equity analyst on the street basically downgraded Coinbase to a sell and then put a $30 or $40 price target on it. So specifically last week, Coinbase came out with earnings. The earnings were not great. They were better than expected, but they certainly weren't great. Almost a third of the income of Coinbase is being generated just by the fact that they are putting their cash in treasuries, and treasuries are yielding 4 to 5% right now. So certainly not amazing in terms of overall business. But what is interesting is that a day after the earnings call, and all the Wall Street published new reports on their EBITDA estimates and their earnings estimates for the remainder of 2023 and beyond, a day later, Coinbase came out with probably news that was more important than anything that came out of their earnings. And that is that they are going to basically be partnering or building a layer 2 chain called Base, on optimism. Um, Only one firm that we're sitting here on February 28th now, a full 6 days after their earnings, and only one company that I saw has actually republished a report or put a revised price target or revised update based on this news, which is really interesting, right? Because I think people in the digital asset space immediately saw the value here. In fact, the Optimism token alone jumped about 20% or so on the news because this L2 that Coinbase is building is being built on the Optimism stack. But the equity market really didn't do anything. In fact, Coinbase traded down almost 10%. The stock traded down almost 10% the day of the news, which just shows you that the equity markets are just not looking at this the same way that the digital asset market is. Um, so more importantly, though, you think about all the things that it kind of shed light on all the things Coinbase is doing that the equity market is giving it no credit for, right? The Coinbase market cap is about 13 billion or so. In fact, its total enterprise value is only 15 billion, and that's on a company that did 9 billion of sales, or 8 to 9 billion of sales in 2021, and still did I believe it was 4 billion of revenue in 2022. So really a pretty low multiple on revenue. And it's really because the equity market is only focusing on Coinbase, the exchange, right? This is a high fee exchange. It's certainly commoditized. There's plenty of others doing it, even though Coinbase is the biggest, certainly the biggest in the US and second biggest overall. Um, the equity market analysts are giving no credit at all to anything beyond what Coinbase is doing in the exchange, right? And Coinbase obviously has a lot of other businesses, some that are built out, like their stablecoin business, the fact that they get, um, a third of the revenue with Circle from USDC, but also the liquid staking business, but also a lot of other things that they have, from self-hosted wallets to the prime broker services to the NFT aggregator to their venture book, and now building a layer two chain on top of the 100 million users that Coinbase already has. So we thought it was interesting, and we actually put a little analysis together in the blog, talking about like how would you actually value Coinbase as a sum of the parts? If you were looking at each of these individual pieces that Coinbase has built, why is the equity market not um, giving them more credit for what they have? So think about it, right? The exchange itself. Well, we have a perfect comp to what an exchange business is: Uniswap. Uniswap has a market cap, the Uniswap token has a market cap of about 4.3 billion or so, about a fully diluted value of almost $6 billion. That's probably the most apples to apples comparison to the Coinbase exchange, right? It's just a token exchange. There's no derivatives. It's pretty black and white what that exchange product is. So right there alone, you have a comp in Uniswap that's almost the full value of Coinbase's equity value. But on top of that, now you have a liquid staking product that Coinbase offers. Well, the best comp there, of course, is Lido, and the LDO token has a market cap of call it $1.5 to $2 billion. And then again, the stablecoin business. Well, Circle was last valued at about $9 billion. Maybe that's too high now, but if you have a valuation, maybe half of that, call it 5 billion, and you say that the stablecoin business is worth about a third of that, you're talking about another 2 billion or so of value there. So right there, just on the established products that Coinbase has, you're looking at least a $10 billion market cap just from that sort of comparable comps analysis. But if you start baking in all these other things that Coinbase is doing now, right? What would a MetaMask token be worth if it came out today? It's probably in the $5 to $10 billion range, right? And obviously Coinbase, has its own self-hosted wallet. FalconX, one of the true prime brokers in this space, has an equity valuation last raised around 8 billion, so let's call it 4 billion today. Um, you know, Clearly Coinbase has a prime broker offering. If you even look at the struggling but a new NFT platform that Coinbase has, something like LooksRare still garners $100 million market cap. Their venture book easily worth $1 billion, and then of course this layer two, Optimism, the new OP token, currently trading with about a $600 million market cap, but fully diluted about 12 billion. I think most people think an Arbitrum token is coming next, which should have $1 billion market cap at least as well, and probably more like in the $5 to $10 billion range, fully diluted. That's another, you could make a case that the Coinbase stock, just on these product offerings alone, using comparable comps analysis, is worth somewhere in the $30 to $40 billion range. So what I thought was really interesting was you have all these new idiosyncratic events happening in the digital asset space this year that is completely masking and overpowering anything that we're seeing from a regulatory front or from a macro front. And here you are with the biggest company in the United States, the only real public company, that isn't a Bitcoin miner that has any real revenues and traction. And the equity market is just completely ignoring something that, in theory, probably adds $5 to $10 billion of value immediately. Um, so we'll see what happens, over time here. If those covering Coinbase stock start to, I guess what I'm really saying here is, the token market itself has largely been ignoring all of this for 6 months, really, while equities continue to fall. And here you are with another example here, where the Coinbase stock is just not being treated the same way that tokens in the space are being treated. It'll be interesting, though, if we continue to see this decoupling, if we continue to see tokens move up while equities and fixed income move down, or even vice versa. But if we continue to trade in this idiosyncratic fashion, that where tokens are their own animal, it'll be interesting to see if the equities of companies like Coinbase start to pick up that same lack of correlation, or if they continue just to trade like the rest of the equity market. So we'll see. But we put some more details in the blog. I think the clear winners here are optimism. I think this base announcement from Coinbase demonstrates that optimism is not just a single roll up, but rather an entire ecosystem of layer twos that will eventually share a collective network effect. Coinbase users and Coinbase equity are definitely beneficiaries here. It'll be very incentivized, we believe, from Coinbase users to start using the new base protocol. And obviously shareholders as well, who get a huge boost here in valuation from this layer two being successful. And actually, you can make a case that Ethereum is a big winner here as well, just that this provides further validation of Ethereum as a settlement layer and ETH itself as a currency. Because Coinbase said very clearly that they have no plans to issue a token, and will simply use ETH for gas fees. So, jury's out on whether or not Coinbase itself will eventually reap the benefits of this from an equity market cap standpoint. But I think from an overall just digital asset market standpoint, just yet another real positive data point in a year thus far, only 2 months in, of pretty much nothing but positive data points outside of regulatory. So, those who are still keyed in on every macro indicator and keyed in on every, lawsuit or proposal coming from the SEC or from other areas of Washington, I think you're missing out on some of the more positive industry specific, sector specific, and company and project specific news that's coming out. So as we're talking here, like I said, the equity market just closed for the month. We'll see what tomorrow brings in terms of interest in this space coming into March. But in my opinion, all signs are showing pretty positive signs for tokens, for protocols, and for the digital asset industry itself. So we'll see. Come back next week and we'll talk more. That's it for this week. That's our two Satoshis, and we'll be back again in March. Thanks, everybody.